Welcome back to Pass the Balance Sheet. Have you ever bought something expensive for your business and wondered, is this an investment or is this just a cost? Why does buying a new roof feel different from paying the electric bill? Why do accountants treat a $50,000 truck differently than $50,000 in payroll? That difference comes down to two important financial concepts: CapEx and OpEx, or capital expenditures and operating expenses. And while those terms can sound technical, they show up in everyday business decisions all the time. They affect how your financial statements look, how your cash flow is managed, how lenders evaluate your business, how investors think about growth, and how operators make decisions about where money should go. In today's episode, we're going to break down the difference between CapEx and OpEx in plain English. No accounting degree required. By the end, you'll understand not just what these terms mean, but why they matter, especially if you own, operate, invest in, or lend to a business. Let's dig in. Welcome back.
Greetings.
All right. So, I didn't say this on the last episode because delegating is not my favorite, but this topic is actually one of my favorites because I don't think that it matters if you are a seasoned business exec or if you are brand new and you started a hobby that turned into a business. This is one of the most confusing areas in the accounting world, this OpEx versus CapEx. And funny thing, I was meeting with a client and their CPA last week, and this has been an ongoing project in cleaning up their balance sheet and kind of getting things all organized and um, in a place where we're confident about the financials. And when
Mhm,
we started talking about the balance sheet and the P&L, CPAs from a tax perspective really, like, the IRS really only cares about the P&L. You have to report the balance sheet, but when it comes to the balance sheet items, because I asked, I'm like, I'm so frustrated in how were you able to run their taxes these X amount of years when they had, negative liabilities or negative assets or what have you? Like, why was
mhm,
triggered when you're running their taxes? And they said, well, Cash, the IRS really just doesn't care about the balance sheet. They care about the assets on them and the depreciation that's used. But like, if they're getting into the nitty gritty, it's not going to be why is your credit card showing a negative balance versus why is this expense what it is from the
mhm,
P&L. And it helped me understand and just solidify that your CPA and your bookkeeper or day-to-day person should be two separate people. But
yes.
I love this topic because um there's so much confusion around it, but it also relates to your personal life, your personal
Mhm,
expenses,
mhm,
your business expenses. So
yeah,
I think anyone can come into this episode and and get something out of it in some fashion.
agreed. Yeah, and we'll have examples that people can apply to their personal life or business situation. So I think that even our newcomers will learn something new today as well. So let's dig in.
All right. Well, I think super important to start with a simple definition. So I mentioned in the intro that CapEx or capital expenditures, it is very often, I mean, we'll say it here just in case someone in the off chance says capital expenditures, but almost always you will hear it referred to as CapEx. And this is money spent to buy, improve, or extend the life of a long term asset. It usually benefits the business over multiple years. Some examples of this would be equipment, renovating a building, replacing a roof, purchasing vehicles, building out a new location, major software implementations, depending on the case. But these are all dollars that would go out to improve or extend an asset or the business. The definition of OpEx or operating expenses are it's money that's spent to keep the daily business running. So things like, rent, utilities, payroll, repairs and maintenance, office supplies, insurance, marketing, software subscriptions. So they're usually consumed during a period of time. I know that we have quite a few examples to talk about, but one just to kind of to get us jumped off of the diving board is if you think about a like a furnace or an AC unit within a business, if you buy that and put it in, it's going to be a capital expenditure, right? It's going to be something that goes to the value of the business, whether it be you now have heat in your unit or you have AC. Either one of those are going to help the life of the building and bring some enjoyment to the business. But that HVAC unit, if you will, needs regular maintenance. It will need filters cleaned. It will need, I'm not an HVAC person, so give me some grace there. But though the initial purchase and installation of this HVAC unit is a CapEx purchase, but that maintenance and repair, changing the filters, those are operational expenses. So I'll let you jump into kind of some other everyday analogies, but hopefully this gives us a starting point, if you will.
Perfect. Yes. And I would like to kind of continue layering on each little piece. We started with the definition. I'll illustrate a home example, and then I'll let you jump into a business example. But I want to kind of layer concepts even before we start talking about how we see them on the financials. So
Mhm.
just starting out super basics now. So yes, to your point, you you covered in a homeowner analogy. So let's now that we've learned from Cash kind of the two definitions of OpEx and CapEx. So on a high level, you mentioned, the OpEx, it's really kind of our overhead. What does it take to kind of run the business? And then our CapEx is these improvements, the elongation of a life, things like that. So let's apply it on a simple basis with our home stuff. So replacing the roof would be CapEx because you are replacing the entire roof. This is something that has a specific long life that it's meant to last,
Mhm.
and so this would be an example of CapEx. But for example, you had like a hailstorm, something like that, and you just ended up fixing a couple of shingles on your roof. This would be most likely OpEx. And as we go deeper, we're going to layer on complexity here, and we'll talk about some major confusion that even I still have in determining what's CapEx, what's OpEx.
Mhm.
And it usually is around that, like um, are we prolonging a life, or are we just fixing things? Like there's it's not always black and white, but in this case, the full replacement of the roof is the capex, and some
Mhm.
minor fixes to specific shingles was just a part of operating. To your example, buying an HVAC system, this is a whole system that is a part of a functioning home. It's meant to last, several like maybe a decade. I don't know
Mhm.
the life on that darn thing. But then to your example, paying somebody to service it, whether they're coming out to change the filters or whatever other routine things that they do to make sure that it's functioning, is a part of that routine overhead operating expense. So to think of it in kind of a little cheat sheet manner, CapEx usually improves, extends, or creates value,
Mhm.
where OpEx just maintains or supports or keeps things moving. Yeah.
Mhm. Yeah.
So CapEx is like upgrading the house, where OpEx is keeping the lights on, to your point of the overhead. So let's take it a step deeper, and let's apply this now to where how we see this showing up in businesses.
Yeah. So, one very easy example would be a coffee shop. Very simple. I mean, I'm not demeaning. I frequent coffee shops and should have stock in coffee shops, so don't take that negatively. But um, a simple business that most people can recognize. So you set up a small coffee shop, um, and you say, you as our listener, you walk in through the door and you see there is this espresso machine, right? That is CapEx. It is giving the ability to actually make the coffee and run this business. um, the coffee beans, this is OpEx. So you have to have the coffee beans every day in order to make this coffee. And arguably, this is actually COGS,
Cogs.
but
Yep, yep, yep.
but for the simplicity of this story, we'll call it OpEx. It is an operating expense. The barista's wages, so the guy or gal that is making your coffee, we do have to run their payroll because no one works for free. That is an OpEx. Um, New signage could be possibly CapEx.
Mhm.
So if you think about maybe the big illuminating sign over the door that very clearly shows what they are, it's going to be there for the tenure of the business. I would probably put that into CapEx. Those
Mhm.
signs are upwards of a few $1,000s. But if you're putting out, say, signs on the window, or you're putting them on other businesses, or you're putting out yard signs on the corner to drive traffic, that would be an OpEx expense. Cleaning supplies. We have to keep this place clean, otherwise, people are not going to come drink your coffee. This is an OpEx. Say about 5 years in, you realize that the building is starting to deteriorate. We need to make some changes. Maybe we need to upgrade the bathroom, or we need to add another coffee machine, espresso machine. This would be CapEx. So we're extending the business's useful life or upgrading the business's useful life, which will then in turn bring in more revenue. So this story is really great at showing the difference, and that it's not always about the dollar amount alone.
Mhm.
Um, in this example, I know some of these espresso machines that some of these coffee shops use are a couple $1,000s,
Mhm.
and so very easy CapEx. But if you look at a sign over, and we'll just for easy math say it's $100, I'm still going to put that big illuminating sign as a CapEx expense, even though it's only $100. And so we cannot rely alone on the value of the
Mhm.
purchase or the
Mhm.
expenditure. We have to really look at what is it doing for the business. And a
Yes.
better question is this creating a long-term asset or benefit, or is this part of normal operations?
You touched on a great distinction there of in this example, this is, yes, the actual coffee machine, it can be 10 grand, it could be maybe 5 grand. But the deeper question is, what what function does it serve for us? Well, it's a revenue producing asset, and it's
Mhm.
going to produce revenues for X amount of years. So that kind of helps answer the question of, if the cost alone didn't provide sufficient direction, then asking that deeper question of what function does it serve. So,
Mhm.
excellent points. And to our listeners who are kind of thinking like, okay, so they're going over, um, well, what I'm hearing is money out, right? We spent money, like it's they're calling it OPEX or CAPEX. And why do we care so much about this distinction? Well, why is because we as accountants, we have to treat these two cash outflows very differently. Even though, it's the same net effect, we're out 10 grand or or X
Mhm.
grand or whatever the cost is, but we have to represent these depending on which one they are. We have to represent them differently on our financials. So
Mhm.
let's dig into that. So OpEx is, as we've now drilled in, this is our operating expenditures. It's really our overhead. Our overhead, it belongs on our P&L, on our income statement. So operating expense, we will see that on our income statement in the expenses section. Um, CapEx is when we talk about capitalizing, what capitalizing means is it lives on a balance sheet. So it is an asset, fixed asset of some sort on our balance sheet.
Mhm.
And so, as we've talked about in prior episodes, okay, so it's on a different statement. Again, the cash was spent. Well, remember what we learned in prior conversations when we talked about amortization and
Mhm.
depreciation. So when we have something on our balance sheet, that means that, when cash was paid, that entire cost of that asset is now, it's not an expense on the P&L, it is an asset on our balance sheet. And
Mhm.
only through its life usage and arguably its operational usage, that gets represented by kind of shaving off a monthly depreciation expense of that usage. So, two completely different ways of representing these. And I'll get in a little bit further in our conversation. I'll kind of uh, point out kind of why, how does it represent that, like why does it matter whether it's here or there.
Mhm.
It does have some implications to
Yeah.
I'll want to build on.
I actually, as you're talking about that, one of the questions we get asked, or I get asked all the time is,
Hmm.
why are both financials important? I mean, a lot of owner operators are really looking at the P&L, and the balance sheet kind of becomes a forethought or
Hmm. Hmm.
uh, if a thought at all.
Hmm.
But the coffee bean example, and I hope I'm not confusing anyone, but maybe we're engaging some of our seasoned leaders. The coffee bean example, we both kind of piped in and said, well, this is actually a cog.
Hmm.
And this is a perfect example of how this works on both, because when you purchase those coffee beans, technically, if we want to get into the meat and potatoes, those would be purchased into inventory on the
Hmm.
balance sheet as an
Hmm. Hmm.
asset,
Yep.
and
True.
then they would move over to the P&L as they're used.
Yeah.
Most businesses in this realm, if they're actually getting this granular, say they bought 100 pounds of coffee beans. They would they would buy those coffee beans, they would use them or add them to the balance sheet as an inventory asset. And then at the end of the month, they would look at what is our beginning balance of coffee beans,
Hmm.
plus our whatever we purchased, less what we used for an ending balance. And that actually gets moved over to the P&L as
Hmm.
cogs. And so
Hmm.
this is why it's so important that you keep track, especially in a business that deals with inventory, why the balance sheet and the P&L makes sense. Because if you are doing this coffee shop as a accountant had intended, you are using both financials because there is a capital expenditure.
Mhm.
That capital expenditure ends up becoming a OpEx at some point.
Yeah. Great point, and yes, uh, I'm glad you touched on it because I think both of us were like, "Oh, well, that's cost of services, that's cost of goods."
Yeah.
So, yeah, thank you for touching on that one. Do you before I get into kind of an anecdote on, avoiding CapEx. Do you wanna talk about kind of, solidify the point with our conversation of the fact that, you can be profitable but not have cash
Yeah.
because of these things?
Yeah. Yeah, okay, so I think to just cost of goods, cost of, services, I love this topic because I come from the manufacturing
Mhm.
space, and I just love cost accounting and what it really takes to make or build something, and so that might be another episode all in of itself, but, uh, I do wanna let our listeners know that cost of goods, cost of services, these are still technically operating expenses, but their definition is a little bit different in the fact that they're direct costs to that profitability. Meaning, in the coffee situation, we cannot make coffee without the coffee beans. So it is an operating expense, but you can't make profit or revenue without that expense. And that is a cost of good. Um, Cost of goods sold. But taking this a little step further is kind of delineating again, we've talked about the balance sheet and the P&L both being important. If you only lean on the P&L at the end of the day, month, period, whatever we're looking at, that coffee shop may be profitable. We may say they made $100,000, but you go over to the bank account and there's not $100,000 in the bank account. Well, it's because of these CapEx expenses. So while these CapEx expenses increased the length of the business, they created value within the business, they had cash implications, but they didn't necessarily hit the P&L. So if we take a simple thing like the coffee maker, for again, easy math, we'll say the coffee espresso maker is $5,000. Our P&L says that we were profitable by $100,000. But at some point during the year, we added a second espresso machine for $5,000. That is not reflective on the P&L. It's still not going to say that our bank account is at $95,000, but it helps you understand that there were cash outflows from the balance sheet um, that did not necessarily hit that P&L. So the business is still profitable by $100,000. And
Mhm.
I would say a bigger picture to look at is when you sell the business, they typically take something off of EBITDA, which comes from the income statement with a couple things added and excluded. But they also take the value of your assets. And so that $5,000 espresso machine can be added into that value and could have cash implications on a transaction side. And so looking at the P&L alone from a profitability standpoint is not an indicator of how much cash is in the bank or what your full cash outflows are. When we're looking at when we're looking at OpEx and building like a 13-week cash flow analysis, we need to include everything on the P&L as far as OpEx goes, but we also need to look at the balance sheet and consider what may be going out from there. And if we take again that coffee maker, maybe we financed $5,000. And so maybe cash left and we paid cash for it, or maybe we said we're going to finance this and that
Mhm.
monthly payment is going to be $500. that's not showing up on the P&L, but it is a cash outflow.
Mhm. You touched on so many different gems. I can't hold them all in in my hands. But let me jump into one. So a couple of nuggets. So want to touch on, yes, that you should not be looking at one statement alone. Both can give you insights, and I want to touch on a specific anecdote. You touched on certain things when they matter when you're selling, and I want to bring a little bit of a different light into this. I want to jump on that train, but bring a little bit of a different light from a personal experience, um, and kind of to explain to our listeners that in the real estate sector, so we're talking
Mhm.
about, you mentioned kind of a regular business, EBITDA, and, kind of selling based on the EBITDA and assets and kind of putting the value together. And there is a little bit of a difference of kind of goals, which is such an interesting thing. Dabbling in the real estate sector where essentially, like, if you're an investor of real estate and
Mhm.
function, it's basically not like it's not an free residence for you to live in. It's meant to be a business. You're
Mhm.
meant to have tenants and
Mhm.
turnover and that whole, you know it's not for you to live in. Well, the sale of those assets it's kind of in its own different world where you can't just look at the asset alone and kind of what you've put into it.
Mhm.
um you this all has to do with the tenant relationship,
Mhm.
your how much you're able to ask for the rent. So essentially your sale price of a a rental property that is meant to be revenue producing. You have tenants. You take the NOI, which is kind of like almost like a different word for EBITDA, if you will,
Mhm.
but and almost kind of like a cogs when you're like trying to apply cogs into the real estate. You're basically taking what does it actually take to operate this property, with all the various maintenance and all of the things that you have to do to the property versus the tenant. And so your net operating income from those operations, you take that value, you divide it by the cap rate, which is influenced also by the market, but that is your sale price. So you cannot jump, you can't just think like, oh, well, I put in like hundreds of thousands into this asset, and so I can sell it for, it's not like this direct translation. And I want to talk about, because I'm in this myself right now. A couple of years ago, we purchased a property, a mixed use property, and it's our first mixed use. It's a completely like different animal than owning a normal condo.
Mhm.
Um, and we noticed that like the prior owners, they were just really shady, and we kind of knew that coming in. And really, like, if you're a buyer of an asset, just assume that the person who's trying to get rid of it, they're trying to get rid of some problem. It's a problem for them, right? And so
Mhm.
you really need to investigate during your due diligence. You really need to ask these questions. So, they were essentially, one of the kind of tricks in this, as I'm talking about this sale value that we calculation that we just discussed. Well, one of the things that the seller is inclined to do is to biff on their net operating income. And so they're kind of like, well, it really only takes me this much to run it or whatever.
Mhm.
So you have to ask these questions because, if they're saying that it only takes this much to run it, and obviously they can get a higher sale price out of it. But one of the other things that you need to look at as an investor is, well, let's look at the balance sheet and let's look at like how old is this asset? What kind of like am I inheriting just like a pain in the butt? Like am I going to be stuck with all of these renovations and everything like that? And so that is kind of the conclusion that we came to. Like we purchased a really, really old building and there's like, they're claiming there's no maintenance, there's nothing, you know. And so we did our due diligence. We did full inspections on it and really found out that, like, oh, no, we are going to need to do a ton of CapEx when we purchase this asset. And so that was one of our leverages. We got the purchase price down. Um, but one of the things that is super hard as an investor, we'll dig a little bit more into the investment and lending side of things. But one thing to kind of know as you are, you know, if you are thinking about being an investor of real estate and something like this, where, you know, the CapEx is of importance, but then your operating NOI is of importance too for selling, you really want to kind of gauge like if you're purchasing this asset, are you coming in with do you have an extra budget for capital expenditures? Because
Mhm.
that is going to eat through your cash runway of operating expenses
Mhm.
if you didn't see that expense coming through. And as an investor, if you are, you know, if you and a pool of investors are purchasing a property, you want to make sure that you know, like, will at any point through its life, will it need any CapEx? And if so, you want to make sure that you're collecting for that money up front because it will eat through your runway.
Mhm.
So super long point to, you know, they're on different capex, opex, they're on different statements. They get treated differently, but they are cash out. Yes, but it impacts you in different ways, not just being on different statements. Sorry.
Yeah. Nope, I agree. And we've talked a little bit about repairs and maintenance, but I want to dig a little bit deeper into that. So
Yes.
repairs and maintenance it tends to be a very gray area, or one of the grayest areas in categorization. And so a repair, it brings something back to its original condition. And so like I mentioned at the beginning, that HVAC unit, if you change the filter, the air quality is going to be better. And so that's bringing it back to more of a newer state. That would be considered a repair. An improvement is making it better, bigger, longer lasting, or more valuable. And so, in this example, an improvement here would be, while we're realizing that this 40,000 square foot building is running off of one HVAC unit, and this side of the building is always hot or always cold depending on the ambient temperatures, because it's not getting treated the way it should be. And so we added a second HVAC unit. That would be an improvement. We're making it bigger, we're making it better, it's lasting longer, or it's bringing more value to the building. So some additional kind of examples would be, if we're patching a parking lot, that's operating expense. Repaving and expanding the parking lot, probably going to be CapEx. May have a couple clarifying questions in that. Repainting a wall, that's OpEx. We're not extending it. We're not making it bigger or better, or lasting longer, maybe arguably bringing more value to it depending on the color it's coming from, but typically going to be OpEx. Building new offices inside a warehouse, this is going to be CapEx. We're bringing more value. This building is now going to last us longer as we grow through employees. Fixing a broken part on a machine. This is at OpEx, and this is one of those repairs that I see so often in that gray area of, we have a forklift and we did some work on it and or we replaced a piece on it. That's surely CapEx. No, it's OpEx. We are extending the life of this asset. If we replace the forklift altogether, that's going to be CapEx. And so, when in doubt, ask, did we maintain the asset or did we improve it? Some of the harder ones that gets even more blurred are it comes down to this question of, are we maintaining what already exists or are we improving the property in a way that adds value, extends its life, or prepares it for new use? So things like if we're fixing, cleaning, patching, trimming, maintaining, that usually is OpEx. If we're building, replacing, upgrading, expanding, extending the useful life of the asset, it's going to point towards that CapEx. And so outside work is messy because one project can include both. Like that parking lot example that I gave, the project might include pothole repair, drainage improvement, restriping, and resurfacing. And some of that may feel like maintenance, and some of it may be true capital improvement. And so understanding the scope really matters and those invoices matter. So, this project on the parking lot, if you're working with a third party on it, you may need two separate scopes of work. And
Mhm.
in turn, those separate scopes of work come down to having two separate or multiple invoices so that you can appropriately allocate to the right situation. And so, again, if we're looking at that parking lot, if we're extending it, but we're also going to be uh, restriping it, the extension, definitely CapEx. The striping, we're more so maintaining it. And so that would be an example where I would say, we want to work with you on both of these jobs, but I need this as the striping as one job and the extending
Mhm.
as another, and I need them invoiced separately. Another great resource that is often overlooked, and I have hit this, I know that the hate for this is coming someday, but your CPA, again, they should not be the same people. Your CFO, controller, bookkeeper should be different than your CPA, but they should be consulting on these things. And so when there's ever a question on, is this OpEx? Is this CapEx? How is the IRS going to look at it? Consult and partner with the CPA because they're going to have insight that we may not, and they may have some loopholes in or some simple definitions based on IRS code. And,
Mhm.
this extension of this parking lot is technically CapEx, but this tax code just got changed so you can take X credit if you use it as OpEx. And so there are reasons that partnering together is so important because they keep up on the tax code ever changing as it is and may have some reasons why a CapEx um, should be treated as an OpEx or vice versa.
Absolutely. Thank you so much for going in length through these. I really wanted our listeners to kind of know some of these nuances because as I mentioned in the past, just in this last tax season, I was walking out with a bunch of corrections, year-end corrections, because until I had that conversation with the CPAs and really talk through like, well, okay, I guess, yep, in this case, that this is extending a life or whatever, like talking through these things, it's not always black and white. And to your point, thank you for demonstrating the instances where, part of the scope is OpEx, but the other part is CapEx. So having
Mhm.
those conversations, having the invoices, all of that documentation, you hit the nail on the head. So thank you very much for that. And to your point, just continually talk to your CPAs about these things because I learned in the last year, that I really did want to write off as many things as I could with my CapEx projects because of the big, beautiful bill and a
Mhm.
clause in it where, certain things that qualify can be basically Section 179, like written, expensed in 1 year, which doesn't come around often, but it comes around sometimes with certain types of vehicles and things like that. So
Mhm.
definitely another point to just consult with your CPA, understand those nuances, and make sure that you're working in a strategic plan for your tax plan, as well as just accurately representing to the IRS standards. On that, kind of switching gears and to solidify and or kind of put a cap to an earlier point of mine that I don't think I delivered quite well. Back to just the some of the comments about the being a real estate investor and kind of improving your property and understanding that it doesn't automatically kind of go to your proceeds expectation, just because you
Mhm.
threw in capex at something. And so one of the uh, challenges that I have as being a real estate investor who cares very much about like giving my tenants a lot of improvements that like they should have seen years ago,
Mhm.
but were very, very cheaped out on by the prior landlord. Part of this is you have to I you can't expect that your capex that you're throwing into this now because there's this need and maybe a past due need, it doesn't translate to increased rents immediately, and
Mhm.
that is one of the challenges of coming into a situation and knowing that you're gonna have to fork out on capex, but not understanding the exact gain that you might get from it, especially in a fluctuating market where it's
Mhm.
already a fragile market. And so, one of the risks is your capex investments, the return from the rental rate increases might not be growing as quickly as your outflows were. So that's a tricky dance you have to do. Lenders are super careful about lenders are man, they can be very, very restrictive when you talk about capex to them. So
Mhm.
if you are let's say you're closing on a property and you really want to disclose in the beginning like what your plan is for capex. You can be like, hey, I'm not touching, I'm not doing anything until year 3, but I think in year 3 we might need to work on the roof or something like that. Lenders are very, very, they're not going to take the risks that you might. They're going to be very, very careful with you. And so what that may mean is, well, I surely do hope that if you're an investor of real estate property, that you do have on the front end that you're collecting extra capital for capital improvements. Because
Mhm.
if you are going in with like an investor train and um, you know, uh, m- y- the property may or may not need capex, but you guys don't really plan for it. And you're like, well, we'll just apply for it with the bank. Not a good idea because, like, really, until the bank, says, okay, yep, I will, lend this to you or whatever, you really, it will be eating at your runway, your cash runway. And that is also a direct impact to investor distribution. So, you want to scope out the property. You want the investors to understand, will there be capex? Are they
Mhm.
putting up additional capital because of it? You want to be very, very clear about that and do sufficient planning beforehand. banks will sometimes even restrict, like, I've had banks, in the beginning where, like, we're buying this property, year 2 is CapEx, and they will want to hold on to these CapEx funds, and you have to then, once you've described to them, like, "These are the funds that we've collected for CapEx in year 3," and then you have to work around, basically, like, "Can I please touch some of it?" Then
Mhm.
they're gonna hold you really, really responsible of, like, "Nope, this expense does not qualify. It does not it's not what you described in the beginning as, so no, this does not." So
Yep.
lenders, they will be more risky, but, be aware of that, if part of the purchasing agreement is you're giving the funds to the banker to hold on to, then they will be very, very, very restrictive of that, and
Yep.
I've gotten in trouble with that before, like, not understanding true covenants of what has been signed, by owners, and then, not having the cash that I need at hand. So,
Yep.
wanted to kind of, touch on those points that are, just the, other outside factors that we see, these 2, different expenses coming through.
Yeah. You did a great job in explaining that. I'm just trying to think on, I think that this conversation here goes into a better understanding of why the balance sheet matters, especially from like a purchasing side of
Mhm,
things. You're starting to see like real value in what business, property, etc. And, to your point on investing, if I'm going to invest in a business or a property or what have you, my due diligence is going to come from the balance sheet and the value of the property. And the operating side is super important, but I think the tricky side on the operating is some of those are expenses that I will take with me if I were to invest in or buy the business. But
mhm,
I may already have systems, processes, or people that can come in and assume what's happening without taking, the employees. And it's
mhm,
unfortunately kind of like the reality, the sad reality of kind of this portion of business is,
mhm,
if I'm an established, say going back to the coffee shop example, say I'm an established uh coffee shop and I assume this new coffee shop, well, maybe I have, 10 part-time baristas and they all want to be full-time and I can now move these baristas over here and etc. Or, maybe I already have the resources to operate this and mitigate some of the expenses that are being carried there. However, the if we look at the HVAC situation, if I go in and the HVAC is already there, that is value. I don't have to deal with it.
mhm, mhm,
I know that the building is going to be in uh, temp controlled environment for X amount more years versus if I look at a business that now needs a HVAC system. Well, that's a few $1,000s that I have to put
mhm.
in. And so a lot of my due diligence is going to come to that balance sheet. And
Yeah.
again, so many business owners and leaders look at the balance sheet as kind of a second shop. But it really is where a lot of the value of the business comes from. And
Mhm,
so that would be the only thing that I would add to that. And a simple checklist. Again, OpEx and CapEx are going to be something that we talk about in depth over the foreseeable future. They'll come up in almost every conversation that we have, but some simple checklist to ask when answering is this CapEx or is this OpEx is, does it create a new asset? Does it extend the useful life of an asset? Does it significantly improve the asset?
mhm,
Will the benefit last beyond the current year?
mhm,
Is it part of a routine operation? Is it
mhm,
simply maintaining something in its current condition? And if the answer points to long-term benefit, I would probably lean towards CapEx. And if the answer points to more of a day-to-day operations, I would probably lean more towards OpEx.
I think that's a really good cheat sheet to conclude with, so our listeners can kind of refer to these questions next time they are confused on whether it's capex or opex that they're dealing with. I think we beat this one to the
Yeah,
ground. I think that's good for round one.
good, good. So what you're saying is we need to land the plane.
Without using the words, yes.
Yeah. So, question. I mean, I don't know why you have this on our kind of like cheat sheet that I'm asking it, but it's really your question. But your favorite family memory.
Yes, this I put that on our sheet because, it was just on my mind after I did some organization this weekend, kind of some spring cleaning part 3, if you will.
Uh-huh.
And I was kind of going through my, office closet, kind of like where I organize all of my outflow
Uh-huh.
office supplies and, like, memory boxes and kind of outflow stuff. And I was just looking through memory boxes of, like, old memories with my stepdaughter who, just turned
Uh-huh.
20 this month and is, we've been empty nesters for 2 years
Uh-huh.
now, but, I just it just took me back to some really, really wonderful memories, when she was young, like, she called us the craft family because we would just
Mhm.
always be working on crafts, like, whether it's like drawing or like making things out of clay
Mhm.
or um man, like what other, like, I mean, gluing things I mean, there were so many different contraptions that we've put together, and I was just looking through our, like, all of these different art pieces, and I just, like, remembered so many different laughs and, like, different experiences that like, they were had because we were all together working on
Mhm.
something, and it just, made me feel really happy and really made me, like, wanna do these things more, and, hopefully my sister and her kiddos will stop by tomorrow because, my sister still has young kids, and,
Mhm.
as, my husband and I were kind of talking about that, the craft days are over, but maybe not for this, new generation, and I just kind of was like, I I wanna do some more craft stuff, like, let me try this with my sister's girls, and maybe we can have a little bonding experience there. It's just, when you're, like, all being creative together, I think that's when the most cool conversations happen, and you're just creating, like, creating feels amazing. So, anyway, that's me, craft family.
I
How about
love
you?
it. Yeah, I for me, it's not like one specific memory. Time is always something so important to me. I mean, like it's like my biggest
Mhm,
asset, so I'm very careful with
mhm,
who I give my time to. But when I think back
mhm.
on like my favorite memories with my family, it's like the time I got to spend with them. And I think I mentioned a couple episodes ago that we stopped doing like major Christmas and started taking our
Yes.
kids on adventure. And I have loved it so much because it's really um undisturbed, not no distraction time. And we've been fortunate enough that, my in-laws have been on a trip with us, my parents have been on a trip with us, and
Mhm.
uh, my daughter is now old enough that last year we implemented like an annual girls trip where it's just the girls and we go
Aw.
spend time. So when I look at my favorite memories, it has to do with spending time with the people that mean the most to me. And a lot of
Yes.
times it's like on some sort of like travel
Yeah.
adventure.
Yes, well, you were in my mind, like, as I was like, let me ask Cash about this because I do remember your Christmas plan that you told me. But
Mhm.
one thing I wanted to ask you about is you mentioned that you will have a summer vacation, and now it's like summertime. So what are you doing for the summer vacation?
Yeah, we try. I mean, our big vacation is really at Christmas,
At Christmas.
and so we do get away for almost 2 weeks. It ends up being,
Nice.
just, like,
It's
between 12
amazing.
and 14 days is typically how long we go for, but
Love
uh,
it.
my husband and I, our anniversary is in June, so by the
Mm.
time this gets launched, we will have already
Mhm.
gone and come back. But we are
Oh,
going to Palm Springs in a couple weeks for 5
nice.
days, so that will be just him and I, so that will be one of
Mm.
our little getaways.
Aw,
And then
love
in
it.
July, um, my parents still live in Oregon, and, um when my kids are really little, they saw them all the time, and now it's, like, even more meaningful to be around them, and this is the first summer that we haven't gone to Oregon for a
Mhm.
couple weeks. My dad
Mhm.
is really missing it, and so they're actually taking the kids for 2 weeks, in July. I say that because they really want 3, and I'm like, "I don't know, 3 is a long time to be away from the kids," but,
Wow.
um, so they're going on a little vacation to Oregon with my parents, which then gives, AJ and I another little, like, mini staycation,
Yeah,
if you will.
yeah.
So,
Nice.
travel
I
is
love it.
so fun to me for not necessarily the getting away, but really understanding people and different
Mhm.
cultures. It
Mhm.
it just is
Mhm.
always important to me to
For
understand,
sure.
we as a country, we dog on different countries, or even within our country, we dog on different states. And sometimes when you
Mhm.
go visit these other states, you're like, you guys are just normal people. Like,
Yeah, yeah.
with,
We're not that different. Yep.
yeah, your circumstances are definitely, contributing to some of our different beliefs. But
Yeah.
travel is just so important. I think everyone needs to travel to gain perspective and maybe have a more compassionate view towards people.
Yes, couldn't have said it better myself. It's great for connecting with other people. Awesome. Good answer, and love it. So excited for your little getaways. That's amazing. All righty, my friend. Well, thank you to our listeners for tuning in, and we'll see you on the next round. At the end of the day, CapEx and OpEx are not just accounting labels. They help tell the story of how money is being used. Some spending keeps the business running today. Some spending builds capacity, value, or opportunity for tomorrow. Simple way to remember it is this: OpEx keeps the engine running. CapEx decides whether you're still driving the same car next year, upgrading the car, or finally replacing the car. So this week, take a look at your own business or household spending. Which costs are simply keeping moving and which ones are investments in the future? That distinction can change how you make decisions, how you plan for cash flow, and how you think about growth. Thank you for going past the balance sheet with us. If this episode resonated with you, please like, subscribe, and share with those who can benefit from these discussions.